Hello everyone, my name is Christian. Welcome back to Tekpon. Today our guest is Joshua from Wesley Clover. Hello.
Hi, how's it going?
Nice to see you again. We met at SaaS Talk. So for anybody that doesn't know you, please tell us a bit about yourself.
So I'm an analyst and investor relations person for Wesley Clover. I look at our different portfolio of companies. I do the valuations. I help them get pitch ready. I do market analysis as well. I take care of our boot camps for our incoming entrepreneurs. Mm-hmm. And I also support the development of our different micro funds globally, where we have different programs. So some have a companion micro fund. Others would be an incubator or accelerator program, and it could be private or public depending on the country. So we have programs in the UK, France, Turkey, Mexico, and Canada. We have a few other countries that we're looking at as well. And like everybody else, COVID put that stuff on hold. And now we have a recession of some sort. And so now we have to kind of decide what's a good market, where do we want to be, where do we want to play. Yeah. We typically, we look for countries that, of course, have a lot of, a large market in terms of, people. It seems to work well with tech. But we also kind of look at what I would describe as maybe tier 2 markets or up and coming. Yeah. So we can kind of we can play in that area with a micro fund. Whereas if you have some of the larger guys, like we're never going to Silicon Valley, for example.
Okay. Yeah. Makes sense. And can you tell us more about Wesley Clover? So the history or how it started?
Wesley Clover is the private holding company of an entrepreneur, Terry Matthews, and he started MyTel Networks and a few other companies as well. And from there, he likes building tech companies. That's what interests him. That's what he does. How we fit into the investment landscape is because if you're building tech companies, you do investment. Yeah. But the real passion is building tech companies, global ones, and hopefully they go public. And if they do, then we get them to help the new companies coming up.
And what type of companies do you invest in?
Primarily SaaS companies and networking. So if it's related to 5G, we have some direct investments in companies in that area. And then our microfunds are very much focused more so on SaaS-related B2B enterprise companies.
Awesome. That's our space too, so we can provide great value here.
That's great. And I mean, like, our overarching objective is to build a global ecosystem of tech.
And what is the process? How do you find the companies until you invest in them? Can you walk us through the whole process?
So we have a mix of the process. So it depends on which country. So if, let's say, it's a country with one of our programs, then the deal flow would go through them. They would go through the Alacrity program if they're selected. Some of these programs do direct investing and some do venture building, or they do both. And so the decision process is really localized to the market. In terms of Canada, we have a couple of different programs. So our West Coast has their own process, and they operate very similar to the other Alacrity programs. And then we have where I'm based, which is on the East Coast of Canada in Ontario, the east side. There's no ocean. Yeah. just snow at the moment. But in that case, we have two ways, I would say, that it occurs. One would be direct and one would be indirect investing. The indirect investing, we have an accelerator here. So there's been, I think, around 100 companies that have gone through that accelerator. And so we have an indirect relationship to the activities of that accelerator. Mm-hmm. And then we have direct investments, which really comes down to, because this is where our head office is, the interests of the founder is more so how we get initiated into valuating potential investments. And, in terms of valuations, I mean, there's, I would say there's no secret to it.
Okay.
I'm sure there are some analysts that believe that they have the secret sauce, but I really think we're all looking at the same thing, and it's who has the best relationships and the best timing that gets the better deal, and then they can tell everybody they knew it the whole time, and they had the special knowledge, and I'm so smart and all that stuff. But, we play mostly in the early stage.
Yeah.
And after the companies have reached a certain level of revenue, we consider them like grown up or graduated, and we don't really interact with them as much.
I understand.
And so at the early stage, I mean, you don't have fundamentals to look at. There's 0 this year and 0 last year and 0 the year before. So you're not going to use historical patterns. And I mean, if you had any absolute insight into the future, well, then you're probably doing really well in the public markets. And so our focus really is on the founders.
Yeah.
Like most early stage investors. Do you think this founder can take it to the next level? And of course, you're looking for, technical integrity as well. The IP, and is it a strong product? And, as I mentioned before, I'm an analyst, so I do look at industry and markets. And so I'm always looking at that competitor landscape, that sort of thing. And I would say that's a high level look at how we kind of decide on the investments.
I wanted to ask you about some key KPIs that you're looking for, but now that you explained it, it makes sense that at that level you can't really choose some, but and you look mostly at the founder. But maybe you can you have some qualities that you look.
Yeah, I mean,
founder.
we still do look at KPIs
Okay.
for sure, because I mean, our companies, we don't consider them graduated until they hit a certain revenue threshold, and I would say they're more in I'd say further along in the growth phase.
Yeah.
So, once you're hitting like that 10 million plus mark, it's kind of like, okay, you're either transitioning to evolve into the next part of, startup organization. So, we'll provide any assistance with that usually, but at that point they're already changing, or they have, once you get over that 10 million point. But for the ones underneath, it's different, right? So we have companies that are under $1 million, we have companies between 1 and 5, and then we have one that are hovering around that 5, working towards 10. And so I would be looking at different KPIs for that. Right now, I mean, we're always looking at growth. So, at the end of the day, it's always going to be growth. I would say we're a little bit more traditional. So, we're not exactly a VC. We play in that world. We do have some companies that would fit into that sort of, I'd say, demographic that they look for. Mm-hmm. But we're a lot more conservative. So I would say how the market is right now is probably a little bit closer to how we view things. Yeah. Because we are looking much more at capital efficiency, generally speaking. We want you to do more with less. And so for us, we're not really expecting you to have like 300,000% growth month over month. If it happens, it's great. But until you get that first VC investment, because we're usually supporting you pretty early. We're looking more at product market fit and capital efficiency. And right now, that's what's popular. Net dollar retention, I'd say, was the one everyone was talking about last year. And also every VC warning, manager runway. That hasn't changed. You still need to manage your runway this year. And if you didn't do it last year, you're probably in for not a very good 2023, as it's now a buyer's market. So they're going to come back to you and be like, remember when you asked me for this? Well, I think you should get that.
Yeah.
And then, I'm looking at, stuff like active users and looking for trends and patterns. And I think that that's really important because, I think the really strong and hot companies for this year are going to have some resistance in losing or churn, we'll say. You're going to see positive factors of active users.
Yeah.
Whereas all the companies that were mostly hype, you could say, they're going to start to fall off. And that's how it's always been. It's like, are you an aspirin or you're a vitamin? I believe that's the term that people are familiar with. And so in recessions, nobody's spending money on vitamins, So we're going to see what the resistance points are for a lot of, I would say, the smoke from the previous bull market.
Yeah.
And were you a company that offered value or were you a company that had really strong marketing? That's
a big difference. Yeah.
Yes.
Okay. Awesome. Thank you for sharing this. And I saw you do a lot of events. Can you tell us more about that?
Yes. So I attend as many events as I can, typically large ones and in different regions. The only region I don't really engage with very much is I would say Asia, for a couple of reasons. One is we don't currently have one of our programs there. We did have one in India in the past, and we were looking at some for potential opportunities in South Asia. But now that stuff is kind of like, that's going to be later out in the future. And the other reason is, to be perfectly honest, those are long flights from where I'm at. And so
the other side of the world.
And so I would have to pick it very strategically for those ones. And I would say, the last couple of years, it's been a pretty locked down region for that kind of activity. It's probably been a little bit more localized, I'm guessing, but I don't know. I don't operate over there. Right now, my focus is mostly North America, Latin America, and Europe. We have sales offices as well in a lot of different countries, so it wouldn't be unheard of for me to go to, say, Asia or the Middle East. If there was something related to helping our companies succeed more, then I would have a good reason to go there. Later this month, I will be at Mobile World Congress. I always go to Mobile World Congress.
In Barcelona, right?
Yes. Not just because I'm trying to escape the Canadian winter here, but it might have a little bit of an impact. But as I had mentioned before, we are involved in telecom. We do have startups that do networking and different offerings around that in terms of cybersecurity to, data network analysis, that sort of thing. And then we have, different telco partners there that we've worked with in the past. I will be spending majority of my time at that conference on the 4 years from now side, and that's where all the startups are. Last I heard, they've also rolled in a digital health summit that's now part of it as well. So we have a couple companies that I would describe as health IT. So I like to kind of, have a baseline as to what's going on with that to see if there's something for those companies. You'll see me in the investor lounge, and I'll also be trying to meet with some of the analysts that I knew before COVID, see if they're still around. Because usually you have some really good market insight conversations with those guys.
But what's your main reason for attending these events?
For that would be networking with other investors.
Okay.
As well as connecting into the different ecosystem players. So, for example, a lot of the countries will bring a pool of their companies there. Their accelerators, incubators might be there. Some of their really big investor houses might be there.
Yeah.
So if we decide we want to put one of our programs in one of their cities or locations, it gives me an opportunity to meet everybody kind of like before making the flight to go out there and have meetings and things like that. The other thing is I go there a lot for market intelligence. reports, they're usually like 12 or months or more too old. You're getting the data everybody already knows. If you're in that space, you already know it. Like, you don't need the report.
Yeah.
But what a lot of these events, the market intelligence you get is through the conversations. And,
Absolutely.
I'm sure just honest people or maybe intelligent, I don't know, you decide, could be putting out false information out there potentially. But at the end of the day, if you're having hundreds of conversations at a conference like this, you kind of get an idea
Absolutely.
of what are people building, what are they doing, what are customers saying, so that kind of information is helpful for me when I'm looking at reports, like a Gartner report or something, and I can kind of gauge some thoughts on it, and that impacts my valuations. Not heavily, because my valuations are impacted by data, but it helps me with interpreting data and kind of, if I'm thinking, I think this is a good opportunity and where I think the market might go, perhaps.
Yeah. And what's your best piece of advice for a SaaS company looking to raise funding?
Oh boy. I would probably suggest that they need to focus on the runway this year again. I would also say that if they can raise debt, it might be better for them. Again, none of this is in isolation. Like, every situation is different. There's different factors. But I really do think that this year is going to be a buyer's market. Last year, around 50% of the exits were acquisitions. I think that's probably going to continue this year. I think the difference is people are going to get a lot less for those acquisitions, especially if there is a really terrible recession that happens. And in that case, it's going to be a buyer's market. So lots of deals are going to be offered. But founders are not in the position of power right now. They were, I would say, 2020. And now it's swinging in the other direction.
Yeah.
There's lots of dry powder out there. And the other thing as well is, if we just look at American data, 71% of the funding raised last year went into larger funds. They didn't go into emerging funds. So, they've been at this for a while. They're operating more like a sophisticated, Wall Street style investment firm.
Yeah.
So now they're looking at things like profitability, capital efficiency. Like, they're not acting like a typical VC, which is high risk, high reward.
Yeah. Yeah.
So in that case, it might be difficult to get the money if you're not doing something that is, where they view the upside from a financial perspective or technical perspective. Which in that case, you might want to look at alternatives. Who's actually has the VC profile? Where is the risk money? Who wants to make a bet on disrupting an industry and taking the risk on that, or your IP vision? That is something you could try. But as I said, I think running your runway is going to be the most important thing, because you really want to put off, I think, investing if you can. Definitely, I wouldn't be, if you happen to be one of the fortunate companies that are doing well, I would really make sure that you think you're going to be doing well over the next 12 months at least, and not need to go back out for money if you're going to start allocating a lot of cash into places. And in terms of what these companies are doing, I still think digital transformation is going to be a very good area to be in. There's a lot of legacy industries that have not used tech yet.
Yeah.
And in terms of that, they're also going to have pressure from their shareholders to make cutbacks this year. So, if you're building a digitally transformative product that ties into that mandate, I think you're going to do well. Their solution to recessions is always to fire people. So if you can sell a product that actually creates efficiencies for them, reduce their costs, that's what they're going to be focused on. They're not going to be focused on growth. They're going to be focused on holding the line and keeping costs down.
Thank you so much for the transparency. I really appreciate it. Yeah, that was great.
Well, I'm not saying anything different than anybody else. It's just that, we don't know.
Yeah.
At this point, and every time we're thinking the market's going to go this way or that way, something else happens.
Yeah.
And really, it's all going to be focused on interest rates. So every time there's an interest rate hike coming in the U.S., that's when you hold your breath and wait to see what's going to happen.
Yeah.
Because it affects everything. And in terms of valuations, they're not going to go up until the public market settles, because the valuations are based on different data points that come out of the public markets, and then that is put into the math of your valuation process. So until that happens, until we start getting exits again, the price points are not going to move up.
Makes sense. Well, this was awesome. Is there anything else that you want to tell us today on the podcast?
No, nothing really. Thank you for having me on. If you don't interrupt me, I'll keep going all nerdy on data and.
From my perspective, I think we covered it all. But if you want, here's an extra question. What has been your favorite conference last year?
Oh, sorry, it was not SaaS Talk. Even though it was a nice conference. But I would say for me, it's probably Web Summit. I would say probably Web Summit. It was just very different than some of the ones I usually go to. And the only thing that is not great about it is it's so big in such a small place. And so you can actually tell when all the people are in Lisbon and when they've left, just based on Uber. So you just have to look at Uber pricing for going anywhere that's like 5 minutes away. So if it's a half an hour wait for your Uber, then the conference is still going. But soon as it goes down and it's less than 10-minute wait, then the conference is over. So that's how you could plan your 4 or 5 days there in Lisbon.
Yeah, I heard that. Thank you so much. I'm really grateful.
Great. Thanks.